Hello people and welcome to another video on YouTube. This video is going to be finding an entry 101. Simply, this video has been made because it's a topic I get asked a lot on Instagram, I get asked a lot in my groups, and I get asked a lot when I speak and interact with other Forex family groups, because I feel like new starters especially really do struggle with finding an entry. And actually a lot of people sort of beat around the bush to do with finding entries. So I think actually this is a great video to obviously finish your Friday, finish your week, and actually bring you into next week with your eyes open a little bit more. So without further ado, let's get into things. So when I'm trying to find an entry, I'm looking for specific setups. So you guys know how I trade. You look at my Instagram. Essentially, I'm trading the same kind of setups each day. Recently I've been trading a new kind of setup, actually, just because it's something I've stumbled across. Usually things like that you do stumble across on accident, and they actually turn out to be great setups. So that's when I wrote the EMA Super Duper Magnet PDF. So if anybody has not seen that, make sure you contact your mentor in the Forex family. If you're not in Forex family, then you may have to wait a while to get hold of that, or you may not get hold of that. That's just unfortunately the way the cookie crumbles. But so like I say, I'm trading the same kind of setups every single day. So actually for me, finding an entry is not that difficult, but some people make it a real task. So hence this is why the video has been created. So when I'm looking for entries, let me just break down what setups I'm looking for and why I'm looking for certain entries. And then I can potentially do a bit of chart work and show why I'm finding these entries, or give you some kind of example perhaps on screen. So first setup that I look at is zone to zone. You guys know that I trade zone to zone on, from my Instagram posts, etc., and any other social media posts. That actually I'm looking on the 1 hour time frame and the 4 hour time frame, and I'm plotting key points of support and key points of resistance. The way to plot this is you are looking to your left always. So you're looking at previous price action to determine like a future price move. So actually you're looking left, you're using the wicks as your guideline, and then you're looking for multiple taps and rejections, because essentially that's what will make up a zone of price. It's like a price level almost. So once I've established where the price level is, the next thing I'm looking for is almost like an accumulation of orders around the resistance or around the support, because we know as from taking sort of 1 4 hour support resistance bounces that we have the 80% chance that price is going to bounce and stall and retrace the first few times when we come to that sort of support or resistance level. So keeping that in mind, I'm looking for when we do actually return to that support resistance and we essentially start stalling in price and we're accumulating, consolidating orders before we have that kind of breakout. So what am I looking for? So when I'm looking for zone to zone entries, I'm looking for a breakout. So usually the candle will close above or below support resistance. You may have another couple of candles. Look at the smaller time frames where you really start to push out. For me, that's absolutely fine, because I'm expecting that to happen. I'm expecting like a harsh break of support or resistance. So a couple of 5-minute candles or 1 15-minute candle where we actually break out. If you also use your EMAs as well for this, usually your entry will be when it retests that broken support or resistance. So it's essentially like market moving in waves. So price will essentially, if the example is resistance, we break resistance, we retest resistance, which will then essentially become support. So resistance turns support, like I've said on screen. If that holds and that zone of price holds and that price level holds as a new support, then generally speaking, and from rule of thumb, we're going to go to the next zone of price. So that will be the next resistance point up. Depending on your currency pair, depending on how liquid it is, etc., and depending on how far away the next zone of price is, you could be picking up 30, 40, 50 pips. And your stop loss can be relatively small anyway, because your risk reward should always be sort of 1 to 2 in my eyes. So if you're looking for 50 pips, your stop could be 20, 25 pips. And actually that's completely acceptable, because that stop loss will have you below that new support that was, of course, resistance before. And that's how I would place my stops and take profits, etc. That's also a question I get asked a hell of a lot, sorry. Moving on to the next setup that I'm looking for. So I'm looking at the 1 hour and the 4 hour support resistance bounces. Very, very similar to zone. Essentially, I'm using the wicks as my guideline. I'm always looking left. I'm looking for major price levels. I'm looking where beforehand there's been major taps and rejections and pulls away. The way I take entries on that then links in with the point below, so the EMA magnets, which I'm sure you would have heard Wakar talk about. So at EMAs Don't Work on Instagram. I'm sure people follow him. If you don't, make sure you go and check him out. And essentially, when price moves so far away from the exponential moving averages, price has to come back for liquidity. Price has to come back to retest to facilitate a further move if that is what is going to happen. So that's why we use the term magnet, because it gives you that kind of target area of where price may return to. So looking on 1 hour and 4 hour support and resistance bounces, when we find that actually we're coming to support or coming to resistance, if it's on that higher time frame, we know that we've got that 80% chance of a bounce. So that gives you that ability for like intuition really to take an entry when we're coming to that specific point. So my advice there would be use a horizontal line tool on MetaTrader or TradingView and understand where it's likely to tap and pull away again, because look to your left and you can see the like prior price action. That's how you can identify your entry, because actually your stop loss would be, I don't know, maybe 5-10 pips below support or above resistance, you know, because it works both ways. And actually, if it breaks resistance or breaks support and you get stopped out, it's for the best anyway. But your target point and your take profit point would be perhaps the 14 EMA on the 5 minute. If it doesn't close, if it closes above the 14 EMA on the 5 minute, chances are we're going to be retesting that 15 minute. This also links in very well to the strategy of CRW, which is the cross of the EMA, the retest of the EMA, so price pulls back when it's found support or resistance. And then it leaves a wick on perhaps 1 hour or 4 hour time frame, depending. And that's where you'll generally see the wick filled, because obviously we have price momentum. And actually the wick's going to be filled because that retest of the moving averages is actually just a liquidity pull up to continue a move down, or vice versa. And so that's kind of explained the super duper magnets PDF that I've made as well, because it's essentially waiting for the second retest of the EMAs. So, you know, the first one, generally you'll get the cross, the retest and the wick fill. And then the second, you usually get some kind of retest on the EMA and then smaller time frame market structure. When I say market structure, I mean, you know, your lower lows, your lower highs, your higher highs, your higher lows. That kind of changes, and the structure, and the cycle begins again. So you start forming highs and lows, etc. In the opposite of the trend, because you close above the 14 EMA on the 5 minute, then you usually close above it on the 15 minute. Then we look at the 30 minute. So usually you can get, 30, 40, 50 pips, depending on your pair, of course, to kind of buy back towards the 1 hour EMA, because it's the second bounce off support and retest that I'm focusing on. And that's all obviously in the super duper magnets guide. I think I've called it EMAs with a twist or something. Don't quote me on that, but it's pretty good. So if you're in Forex family, go check it out, because actually you may already know of it, but actually it's got two parts to it, because it's got a daily wick fill part as well. So you might want to check it out. Fourth setup that I always look at is consolidation. So we know that actually the markets consolidate for 70% of the time that they are open, and we're only trending for 30%. So do not be alarmed when we consolidate, and essentially consolidation means price is moving sideways. It's almost playing ping pong. It's maybe ranging, and essentially it's moving down, up, and there's nothing major happening. Best thing to do in this point is wait, like Forex 6 God, so shouts to Forex 6 God says, you should draw a box and chill, and then if it breaks out, you can react. And as traders, we need to be reactive anyway. So with consolidation, you want to be using the wicks again as your guideline. and draw the box from the top of one wick to the bottom of the sort of lowest wick. So use the low and the high to determine where the range of the box is. When we break the consolidation box, often we'll have the retest, and that will be the second candle or third candle. So break, retest, because essentially the retest will give us the wick to fill actually on a different time frame. So very similar to zone, and actually you can aim and take profit from like the zone to zone trading as a point of reference there, or just take profit when you see fit. So those are my 4 main kinds of trades and setups that I take. So that is how briefly I'd find an entry on them. The next part of this video is why I am looking for those specific setups. And so it's very simple. Your confluences are king. So this means you need multiple confirms. So for myself, I'm usually looking at about 4 or 5 different confluences to actually put my money on the line and take the exposure to my account. So take my 3, my 4 positions, because actually I don't want to just take things off, off a one confirm kind of thing. Essentially that to me would be a gamble. It would make the setup higher risk. And actually for me, I'm quite a conservative trader anyway. I'm only really looking for the most sure thing that I can find. So obviously nothing is a sure thing, but you can find setups with 5, 6 confluences which give you a higher probability of winning the trade, because of course it's either going to be a buy or a sell anyway, but your analysis takes your win rate up considerably, because generally the losses I take are sometimes just due to entry, which is why I'm making the video. Usually the analysis is fairly good. But so I'm looking for multiple confirms. So when I say multiple, I mean maybe look at live charts, maybe look at pre-markets, look at the higher time frames. You don't want to be looking at a 1 minute chart and say, okay, well, the EMAs are crossing now, so we must take buys or we must take sells in the direction of the cross because the EMAs are, gospel. They're not. They're a lagging indicator. So actually the price lags. The price moves and then the indicator lags behind. So actually it's not a sure thing. You want to basically use it as a confirm to say, okay, higher time frames make sense. Okay, lower time frame makes sense as well. Okay, we've got a cross coming. So we know there's momentum. But what are my other confluences? And the reason I've got so many confirms is that fake outs are so common, especially with zone to zone and especially with consolidation. I'm waiting for that break and the retest. No retest, no trade, because essentially I'm ticking off a list saying, okay, well, we've broke resistance or we've broke support. If we have the retest, then I'll look at the other time frames, maybe look at the EMAs to see where and if it's holding and if it's respecting. I'll maybe look at lower time frame structure. So are we making lows and making highs as normal? To understand how to not get caught in a fake out. So a lot of people, they'll take a trade on consolidation or zone to zone because they see it breaking out. So they'll take the position essentially at the top of the break. Then it will retest, so they'll be in drawdown and panic. They might get their stop hit because they've been a bit too tight with the stop loss. And also generally they'll say, okay, well, zone to zone doesn't work and consolidation breaks don't work. I don't know how these people are trading them. Essentially, it's just patience. You need to not rush in, because actually with entries, the biggest thing that I can say to you is there always will be fake outs in the market. There will always be, liquidity pools and price pushes, etc., that you don't expect. You need to just plan and attack. In regards to, premium price, one, that's something that institutions have. But as traders, we need to have our own premium price in mind. So, for example, if I'm looking at a sell from resistance and it falls 5 pips shy and starts to move back down, I will not be taking sells, because actually I've got that point in mind where I want to get that wick entry and I want to get the best possible entry to A, save drawdown, and B, get more pips than I had bargained for. So you want to try and get the best possible entries. And the only way to really do that is have the premium price in mind. So whatever the decimal place is to the right, have that like little figure in mind. If it taps that, you take your entry because that's what you've said is your premium price and your premium entry. And for me, I talked about it in another video, but actually, if you take your entries where your initial stop would be, you'll be surprised how many setups you don't get stopped out of and how many setups go your way, because that's, again, down to patience, down to your premium price. So just moving on into the latter part of the video, what are the EMAs doing on multiple timeframes? So EMAs, of course, exponential moving averages, and I'm looking at them on 1 hour time frame, 15 minute, 5 minute, 4 hour, and daily sometimes, because bouncing on the 200 EMA for using it as kind of support or resistance can be amazing. So make sure you're looking on multiple timeframes. You need to be doing top-down analysis, really. So when I say top-down, depends how long time frame you want to go. I personally go 1 hour, 15 minute, 5 minute. Another thing that makes me reconsider entries is looking at, is there news around the time of the entry that I want to take, or in the next 1 or 2 hours of the position, sorry. So actually, if I'm in a position and I'm holding it and actually we're consolidating, nothing really is happening, I'm waiting for like breakout. Do I want to be caught in the news, or do I want to take advantage of the news, maybe use a pending order, etc., depending on what kind of color folder it is, maybe if it's red folder. So the point is, you don't want to be stuck in that, and you don't want to close early just because there's news coming out, because it could go your way. So plan accordingly in regards to entries around news. And the final thing I would say is think about the correlations between certain currency pairs. So we know that USD JPY and gold, so XAU USD, are very, very closely correlated, because gold is a safe haven. So people, if the world's going crazy, people put their money into gold, which is why it is worth so much at the moment. So it's worth like $12.85 per ounce, which is pretty hefty. But so, of course, if gold is moving up, then we already have that kind of idea that USD JPY would be moving down, and USD backed pairs actually should be moving down, because, with gold, we're essentially buying the metal, selling the USD, and vice versa. If gold is moving down, we would be buying USD, selling JPY. So that's very basic stuff, buying and selling currency pairs. The whole point of Forex, essentially. So if you don't know that, maybe go to a different video. But so the point that I'm trying to get at with correlations is, if that the gold is moving up and USD pairs are moving up as well, one of them has to be lying, because it doesn't make economic sense for that to be possible. So maybe hold back when you're looking to find an entry, because actually one of them is not telling the truth, and you don't want to be caught in gold buys when actually it was just a fake out. So that again goes to fake outs. So make sure you're looking at your correlations between pairs very closely to see if, one, it makes economic sense, because if it doesn't, you're better off not trading. And then finally, what does previous price action tell me is logical? That is the biggest thing for me. So this is just you looking left and essentially extending things out to the right to predict future price movements. So if you look to your left and you see multiple taps on a price level, if we tap that point, chances are we're going to retrace, or if we break that point, we're probably going to significantly break it. Don't just look at a certain price level and say, okay, well, that seems interesting, I'm going to take an entry because it looks interesting. You want to make sure you've got your multiple confirms. Your Confluence is a king, like I've said at the start of the video. So hopefully this has given you an insight into how I trade and how I go about finding an entry. And now I'm going to put on screen just a quick example of a zone-to-zone entry of how you would take entries based on a couple of these different setups. So hopefully you enjoyed that, and that will be coming to your screen now. So people, as I described earlier in the video, I'm just going to run through a really quick example of zone to zone and looking for entries. So as you can see on screen here, this is the pair GBP JPY, so the Great British Pound Japanese Yen. Essentially, I'm on the 1 hour time frame, and this is just an example of, if you draw your zones properly, you can take great moves. So you can see this top point here, we had a major tap and rejection, and essentially went from zone to zone. How did I know this was likely and I did take part of this move? But how did I know this was likely? So multiple taps on a price level, like I've described earlier in the video. If we don't break it, so this is resistance. If we don't break resistance and we respect resistance, chances are we may fall to support. That is just like a rule of thumb. And how do I know this is resistance? Well, like I said earlier in the video as well, I'm looking left. I'm looking for multiple taps. So we've got taps, 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 and taps. So multiple taps and a pull away. So when price is respecting that point, when we come up to this point here, I would already be able to forecast, okay, if we don't break, we're going to struggle and we're probably going to fall to the next support. How do we know that this point here is the next support? Well, of course, we know that now, but if we look to the left, you see multiple taps on the price level. Taps, rejection, tap, rejection, taps, more taps, rejections. So you can see I'm looking for multiple taps. Those are my confirms. And at this point here, I did actually take the super duper magnet back towards this point. So that was an example of put on Instagram as well. So if you haven't checked out my Instagram or followed me, make sure that you do, because I put these examples up pretty much every day because it's the trades that I take every day. So hopefully this example on screen has been helpful to see how to take potential zone-to-zone example entries. For example, the next point I would think about going zone to zone. Obviously, it's Friday, so it's a difficult one to call. But if, for example, we came down to this price level here and we broke it, chances are, like I said, we have to pull back, have your retest, and then you'll move to the next zone of price. How do I know this is the next logical place? Well, I'm looking left again. Multiple taps and rejections, taps and rejections, taps, rejections. So that is just an idea of how to understand and read market structure, because actually we know if we break, we come up for liquidity and we pull down even further. That is just the market moving in waves and the cycles of the time frames. So you can jump to a lower time frame and really understand actually the lows and the highs that are being made, because actually it does make perfect sense why we stopped up here, because we essentially formed a lower low, we formed a lower high, we formed a lower low because essentially this price is lower than this price. So it makes perfect sense why we came back and why we stalled there. So multiple taps on the price level. We didn't break because that was our lower high, because we're actually in a downtrend if you look from last week because of the Bank of England rate that came out. So it makes perfect sense. So just make sure with your entries you're looking and you're just being logical. That is my best advice. So hopefully this video has been helpful. And if you have enjoyed it, make sure you tell a friend to tell their friends. Make sure you subscribe to the channel. Make sure you give it a thumbs up anyway to help the channel grow. And the next video will be at 1,000 subscribers, and it will be a day in the life vlog of myself. So that should be entertaining for me to film and hopefully entertaining for you to watch. So I hope you've enjoyed this, and like I say, trade safe and trade smart. You don't have to trade every single day. Today is a US bank holiday, so it's Veterans Day, I believe. So that's why I've chose to make a YouTube video and actually not really trade today at all. So stay safe, and that's it, everything from me. Peace out, peeps.